industry, insight on profitability and competitive edge. And our moderator is Joe Stather, Vice President at Questex, a seasoned expert in hospitality operations and strategy. Mr. Stather, please join me on the stage. Thank you. Welcome. Hello. Hi. Welcome. Thank you very much. The stage is yours.
Hello. Hello. Perfect. Thank you. First of all, I would just like to extend a big thanks and congratulations to the Turkish Tourism Investment Association for a fantastic edition of TIF this year. I think it's great to see so many local and international people coming together here. It makes for great alchemy and hopefully many deals being done. I think sticking with the international and global theme, I now have the great privilege of interviewing in back-to-back sessions 3 great leaders from global hospitality companies, the first of which is David Kelly. David is the Senior Vice President of Continental Europe for Hilton. David, please join me on the TIF stage. Thank you.
See you.
You too. Okay, David, so warm welcome to Istanbul and TIF. Great to have you here.
Thank you very much. Great to be here. Nice to see everybody.
So the first question I have for you, I mean, clearly Hilton is a global behemoth of a hotel company known pretty much to everybody, consumer and industry professional alike. How often is Turkey discussed in the boardroom at Hilton? How important is Turkey as a country to Hilton?
Yeah, really important. Today, Turkey is our 6th largest region in the world. So really important to us. So if you think about us globally as a company first, today we've got over 8,300 hotels open and operating across the globe. We have 3,500 hotels now in our active pipeline. Today we have more hotels under construction than any other major hospitality company in the business. And that's kind of all wrapped up with over 200 million Hilton Honors members now. So from a global perspective, growth is good. Business is looking really positive. If you think of that then in the kind of European context, we're now at just over 583 hotels across Europe, 230 of those in the pipeline, across 45 different countries in Europe. So if I bring that then into the Turkey context, today we're at 122 hotels supply and pipeline across Turkey. A really important market for us. If I think about Europe, we've opened 30 hotels this year in Europe. Next year, we're on track to open close to 50, and of that 50, we'll be opening 10 here at least in Turkey. And I was really delighted last night that we were able to announce the signing of 10 new deals in Turkey. Which is fantastic for us. So a really important time for us in Turkey, a really important strategic market. We've been in this market June next year, 70 years. 1955, we were the first international hotel company to open our doors with the Hilton Istanbul Bosphorus. Conrad Hilton opened that hotel. It has a really special place in our heart, and certainly from all my travels through Turkey in the last 12 months, talking to our owners, talking to our team members, it really is in the heart of all of them as well, which is really lovely to see.
Absolutely. Hilton have been here in the long term.
We have.
Just touching on, you kind of mentioned Europe and then zoom down into Turkey. What are the similarities and differences that you see in terms of your development pipeline in the rest of Europe versus what you see here in Turkey?
Yeah, it's not dissimilar, right? We have great growth throughout Europe. We have a very strong resort strategy in Southern Europe. This year we've opened 11 resorts across Southern Europe. And if you apply that thinking to Turkey, it's no different. We have a great range of our brands now operating in the Turkey market. If you think of maybe Istanbul first, we have 26 hotels now trading, and over the next 3 years, that will grow to 40 hotels. And if you look at our pipeline of now 39 hotels, we'll be right across a range of cities and destinations, both resorts, similar to what we are in Europe, but also looking at new destinations, ski destinations, where we'll be opening a Tapestry next year in a great ski destination, and introducing 3 of our brands into the Turkey market over the next 12 months as well. Embassy Suites will be coming to Turkey. We'll be opening up our first Tapestry in Turkey and opening up 2 great canopies in Turkey as well. So just continued great momentum in this country, and it's, as I said, a really, really important part of our growth plans for the future.
And quickly on those new brands, David, are there preferential deals that can be done for developers that are looking for a first mover advantage there?
Well, I think, as I said, we've been in Turkey now for 70 years. We've got a great foundation. And if you look at the 83 hotels that we have open across our portfolio in Turkey, I think one of the many reasons that owners invest with Hilton and give us the honor of putting one of our brands on their door is because of that 70-year history. We have a proven track record of success in this market. We have a proven track record of working with our owners to make sure that we continue to develop this market and we develop and grow together. And that's a really, really important component of our growth strategy. We want to grow together with our owners and partners.
And I think you've touched on it, but we heard from Tom Emanuel at STR yesterday that Hilton is leading the way in Turkey in terms of rooms under development and in the pipeline, over 5,000 keys. What's the secret sauce?
Well, I think it's similar to what I just mentioned. 70 years is an amazing foundation. So our Hilton Istanbul opened in June 1955. I'm sure many people in the room will remember that, and most people I talk to have a wonderful story about some point in their career or their family life or their personal life having engaged or interacted with that wonderful hotel. From there, we have grown and continued to grow. So I think our secret sauce is the strong foundation that we have from that hotel in 1955. And to ensure that we continue to have that strong foundation, we're investing $80 million at the moment in renovating the Hilton Istanbul Bosphorus to ensure that it remains a key icon in this city, a key icon for Hilton. It's got a very close place in our heart. Very similar to the Waldorf Astoria in New York. If you think about that hotel, if you think about the Hilton Beverly Hills, you think about Hilton Istanbul Bosphorus. So I think it's that core, that foundation that has allowed us to grow with our owners for many, many years. And I think that's the secret sauce.
And just for clarity, that is a leased asset, correct? So that is Hilton deploying its own funds into an investment within the Turkish market. Touching on operating agreements, David, what does your portfolio across Turkey look like in terms of the split between lease, management, and franchise?
So as you've rightly mentioned, we have a great lease at the Hilton Bosphorus, an amazing hotel. And then if you look across that portfolio of 122 hotels, supply and pipeline, 83 of which are now open and operating. Just over 60 of those are franchise. The balance are managed. And if you look forward into our growth into next year, those 10 hotels, predominantly franchise, but we continue to get a really strong, healthy balance of managed as well. And again, I think that goes to the trust of our ability to give our brand for a franchise, or if an owner wants us to operate, that we can operate for them as well as a great management company.
And as somebody that really knows the operations of hotels, how does Hilton deliver profitability for its owners, particularly in the managed estate?
Yeah, absolutely. Listen, I think first and foremost, it's about our teams, again, going back 70 years, we have an amazing team built across Turkey. Many of the people and team members who started it at the Hilton Istanbul Bosphorus are now today our general managers, our commercial directors, our directors of operations, working across our portfolio. So again, they know how to run the business, they know Hilton, and they engage really, really well with our owners. And we're very focused on growing our team members. We have nearly 7,000 team members here in Turkey today. Very focused on what we call a fully human experience, right? Around their growth, around inclusion, and around well-being, which is very, very important for us. And we continue to develop our team, not only in Turkey, but they travel to our hotels overseas, get new learnings, get great opportunities, and then come back to Turkey and apply that great Hilton knowledge to our business here, which again is so important moving forward. And then, so if you have great people running your business, you're usually in a good place in terms of your ability to drive great profit. But in addition to that, you know, we're very, very focused on our ESG efforts and our travel with purpose. We launched our 2030 goals in 2018 with a real focus on reducing waste, watts, and water. And in that time, since 2008, if you look across those three categories, we have reduced over 35% in each of those categories, so reduced our carbon emissions. But with that, on top of it being really, really important for the environment and what we do from a social and governance point of view, that in turn helps drive profitability because you're reducing energy costs. We're putting LED lights into our hotels all the time, EV charging stations. We have a very, very big focus on digitizing our food waste. So that all of those elements have mutual and complementary benefits, not only to the environment, but also to the profitability and the bottom line, which is really, really important.
Sure. I mean, some of what you're saying there sounds like it might be a bit of a drain on CapEx, but I think what you're saying here is that it can be good for planet and also for profit, correct?
100%. Absolutely.
Fantastic. We heard yesterday, David, that the US inbound demand that Turkey is now observing is really going through a strong period. Clearly, Hilton's a brand that's synonymous in the US and with US travelers, but if you kind of dig into that, how is it specifically that you're able to leverage that trend on behalf of owners in the Turkish market?
Yeah, it's a great question. If you look at our business across continental Europe, US GOB into Europe is significant and really, really important to us. And the reason we can leverage it, not only for the rest of Europe, but also for Turkey, is we have over 200 million Hilton Owners members. And you've seen, as you've rightly said, the growth in US GOB into Turkey. If I apply to a longer term and more established market with the US GOB like Italy, if you look at a city like Rome for the last 2 summers, we have operated at over 80% Hilton Honors occupancy in that market. So if you project US GOB continuing to grow into Istanbul, into Turkey, again, you wrap that up with over 200 million Hilton Honors members and our strong US base, then that would strongly suggest that the opportunity for us to attract the US business into this market will be very, very strong for some time to come. And I was reading recently an article from the World Travel and Tourism Council around Turkey in 2023. I think it's something like 12% of GDP is coming from tourism. So that again suggests that the opportunity is there for growth. It's reflected in the 10 deals we signed last night. It's reflected in the 3 brands that we're going to be adding to the market in the next 12 months, the 10 hotels that will open over the next 12 months. All of that tells you that it's a great growth story in Turkey. And we're here for the long term. We've been here for 70 years. We're going to be here for many, many more years to come. So great, great growth opportunities for sure.
And just very quickly, I don't want to go down a hole with this, but there will be some cynics that say, how loyal are your loyalty members? Are you able to share a bit of insight on that?
Yeah, well, I think my comment on Rome is the perfect example. If 80% of your occupancy through a month like June, July, and August is made up by your Hilton Honors members, then that tells you that they are very, very loyal. And our Hilton Honors occupancy, tends to run over 50%, depending on the market. Some markets 50%, some markets 64%, 65%. You look at Rome, it's 80% through the summer. They're really loyal. We're engaging and interacting with our Hilton Honors members every day. We have the ability to communicate with them daily, weekly, and our focus is we want our Hilton Honors members to dream about staying at a Hilton, then we want them to shop Hilton, and then ultimately we want them to book Hilton. That's our focus. That's how we communicate with them. And again, with over 200 million and growing every day even faster and faster, and you think about that US growth into Turkey, it just presents this huge opportunity for the future.
I like that. Thank you, David. Final question from me. We're all looking for that kind of globally significant but locally relevant solution, I think. So perhaps you could share a little bit about your current infrastructure and how you're looking to develop that to make sure that owners in this market are able to benefit from the global scale that you have, but still also have a localized approach.
Absolutely. So I think when you look at our 70-year history, that has also given us that ability to grow our people organically within Turkey. So we have a great Hilton Worldwide sales office based here in Turkey, our revenue center based here in Turkey, our finance shared services, our commercial teams are all based here in Turkey. So it's in Turkey for Hilton. So continued focus on developing our people locally to ensure that they understand the Turkey context, they understand how to operate in this market, and that's how we will assure success moving forward.
Great. Everyone, please give a very warm hand for David Kelly of Hilton.
Thank you very much.
Thank you, David.
Thank you.
Cheers.
Thank you very much.
Okay, so swiftly moving on to our next interview, and I am absolutely delighted to welcome to the stage the Regional VP for Development in the Luxury Space for the Middle East, Africa and Turkey. Please come to the stage, Jean-Baptiste. Hey. Thank you. Welcome to TIF, welcome to Turkey.
Thank you.
So another interview with another brand ambassador, shall we say, and I'm going to start with very much the same question that I posed to David, and that's how much is Turkey mentioned in the Accor boardroom? How important is it strategically to your organization?
Yeah, thank you. Same question, hopefully different answer. I think Turkey is very close to our heart, and I think he mentioned it, and I think this is true for Accor too, and true for all the operators. For us, it has another level of significance because we are European, okay? We're a French company, and obviously we have a bunch of our loyalty members and a quite large number of demand that is emanating from the European market itself. So obviously Turkey is also receiving these customers, but emitting those customers to our hotels in Europe. The second element why Turkey is important to us is it's Rixos. So we acquired Rixos a couple of years ago, and I was with the family yesterday, and this is probably the best acquisition we've ever made. So Accor today is the biggest exporter of Turkish hospitality worldwide. We're developing the Rixos brand now across the globe. We're developing now in Mexico, in Vietnam, and in China. So we're very proud of this Turkish heritage that is now part and embedded within the Accor DNA. Yeah, I think in a nutshell, this is it. Today we have 75 hotels in operation in Turkey. We're growing in number. We have 25 hotels in the pipeline. We're already in most cities, first and second tier cities. I think our focus, with people like me, is now to further develop brands that are not yet established in the market. We see opportunities for new brands to enter the market as the Turkish market has evolved, especially in the lifestyle segment and the luxury segment. We think Turkey is really ready. I think the customer base is there. I think the appetite of investors is there. So really focusing on those aspects. And there's still a lot of number of unbranded hotels that are run by families or smaller investors that they want to preserve the heritage, the name of their assets, and they've been operating them for years, right? And I believe we have solutions with collection brands, for instance. I see a lot of opportunities for collection brand in such a market because you basically provide distribution, you provide the loyalty program, you provide training, sales support, etc. But in essence, you allow those people to maintain the heritage, the DNA of their hotel. So I think that's one way of potential growth. The second way we see further growth in Turkey, and also considering the challenges the market is facing at the moment, is branded residences. So this is something that has come up quite a bit in Turkey. I mean, there's Four Seasons opening very soon. Marriott has done a number of good things, and we've participated in this. We've been doing branded residences for a long time through Fairmont mostly and Raffles. And we believe this is another lever for developers to grow within the hospitality ecosystems, not necessarily the traditional hotel model, but that's still, I think, a model that is quite interesting because you're able to leverage on the brand and sell at a premium. And I think you will see some of the picture of the Raffles we have in London, which is yet another example of how developer and brands together can work together in achieving something very unique that delivers a premium on the price, but also accelerates sales velocity. So you sell faster at a higher price. So I think this is also a very good way of growth for us in the Turkish market, and there's a lot of interest from Turkish investors and international investors.
Great, and just rewinding and having to think about the base of assets that you currently have here in Turkey, what's the distribution of those in terms of the different tiers of the market, geographical spread?
So out of the 75, it's about 20 of them are what we call luxury and lifestyle.
Okay.
A bulk of them are actually Rixos hotels. So we have a dedicated all-inclusive platform, which is very specific and that we're growing worldwide with the Rixos brand. So majority, I would say, are in the premium economy and mid-scale segment still, especially in second-tier cities. But again, our focus now is to grow, and if you look at the pipeline, with the 20-25 hotels we have in the pipeline, bulk of them are in the luxury or lifestyle segment.
And in terms of the operating agreements, management, franchise, both, differs by brand?
Yeah, so I think one way Accor is a little bit different from our competitors is we are mostly a manager rather than a franchisor. So a bulk of our hotels actually in Turkey are managed rather than franchised. And that comes from our DNA. We used to be a hotel owner, right? I mean, we sold most of the real estate. We were one of the last big operators to sell the real estate. But we still manage those assets, right? So when we came to Turkey years ago, we came as investors because we really believed in the market.
Yep.
And we saw opportunities. So after we sold those assets, we're still managing them. And I think going forward, at least for as far as luxury is concerned, we will continue to manage. This is the preferred business model. But in Turkey, the good thing is, first of all, you have very educated and experienced owners. So we can agree on some specific brand for a franchise model, particularly for the premium mid-scale economy segment. But you also have a very good third-party management companies. Some of them are in the room. They're really experienced, and we work hand in hand with them to grow.
So your focus is really on the luxury and lifestyle piece, as you've mentioned. So if we press into that a little bit, how does that shape your focus across Turkey? Are there particular markets that you really have to focus on because that's where luxury and lifestyle developments in particular stack up financially?
Yeah, absolutely. I think, first of all, just for people to understand, Accor is a little bit organized differently than most operators. We are a brand-led organization, meaning that we have different divisions within Accor that addresses different segments. So I'm part of the luxury division, for instance. You would have a different division for lifestyle and another one for premium economy and mid-scale. So the people that work on Fairmont or Raffles, they only do Fairmont and Raffles. They don't do Ibiza Novotel. We believe, an owner who owns a Raffles, like the Zorlu family here, have different needs, they need different attention, and they have a very different profile from an owner of a Novotel or Mercure. No disrespect at all, they are just different profiles, right? So we felt a need, and so far it's been very well received from our partners, to really segregate this and having specialized and expert people into what they do. So coming back to your question, I think in the Turkish market for us to grow, especially on the luxury and lifestyle segment, one way to do it is to have a hotel co-located with branded residences. That usually helps a lot because you can help, with the sales of the residences to improve and pump up a little bit your IRR. And I think the focus at the moment for us is really Istanbul and Bodrum. This is where we see, in terms of average rate segmentation, the profile of the demand. This is where we see a good fit for our luxury brands in particular. But when it comes to the other brands, we're already quite well established in the Turkish market, and we will continue to penetrate those markets.
You mentioned when we spoke previously that, in the luxury and lifestyle space, you're looking for very specific locations within Istanbul and Bodrum, certain sites, certain assets that can be converted. But with those assets come, one, a lot of competition, and two, quite a few challenges. Do you want to talk us a bit through how you address those working with owners and developers?
For sure. If we look at Istanbul, obviously the preferred location is always Bosphorus, for a luxury brand. Obviously this comes with a lot of difficulties, but challenges. The Bosphorus is highly restricted. As a developer, we work with them hand in hand to go through all this process and the paperwork. If you look at what we've done, for instance, with the latest Rixos we opened, the latest hotel we opened is Rixos Tersane, and whoever hasn't been there, I really encourage you to go. Tersane is really a redevelopment of an older part of Istanbul that was almost forgotten. It's a little bit industrial, had not such a great reputation. But if you go there and visit the Rixos, and you're by the pool, you see Galata, you see Sultanahmet, and you're on the Golden Horn, it's really one of a kind of experience. And this area will continue to grow. There's also development and some more hotels coming. So I think the key there is really to work very closely with our partner, ensuring that we have, first of all, a differentiated product. I think the key going forward is a lot of curation. As the market becomes quite developed, and very competitive, you need to make sure that your product is differentiated. We do this with, selecting new interior designers, so we help them find, new ideas with new designers. We have a dedicated F&B platform, for instance, so we acquired one out of Paris called Paris Society, one in Dubai called Ricas. So we operate standalone restaurants. Well, for instance, if you go to Dubai, we operate restaurants in the St. Regis. We operate a Japanese restaurant in Four Seasons, beach club in Park Hyatt, just to give you a sense of how we do it. Because we felt, F&B is a very important part of our business. It's about 40% of our revenue. And we didn't have the skills or the concept to maximize this potential. So we just bought, standalone company that were very successful. And that's also another way to support our partners. Because traditionally, big operators are not really good at F&B, Accor included in the past. But now this is changing, and I think we're completely reversing the optics on looking at F&B as almost a standalone business model. And going back to the curation, so, you need a curated design, curated F&B experience, and it's all about, being very personalized, very intimate. I think that's the only way going forward that you can succeed, is to be different, because if you're going to copy-paste what's been done in the market that has been successful, in my opinion, you will fail, even if you have the best location.
Thank you. And last question from me. I mean, clearly the shift in spend to experiences is most certainly benefiting the luxury and lifestyle space. I think that's very clear. But you mentioned that it's an increasingly competitive market with consumer expectations continually pushing boundaries. If this is a conversation which is partly about profitability, how do you make sure that luxury assets aren't an ongoing capex drain for owners, but continue to be able to sustain strong RevPAR indexes, for example?
Yeah, look, the way we operate, and we've always been operated, is really, and I think you can, I mean, our reputation in the market is to be very much owner-driven, you know, developer owner-driven. So, and our background being a hotel owner in the past, you know, I think everything we do, we look at it from a return on investment perspective. A lot of time people come to us, you know, they say, I want to build the Raffles in this location, and obviously everybody wants to own and build the Raffles, but that often case is not the most profitable solution for their location or project. So I think we are very pragmatic in our approach. You know, we sit down with them, we look at, you know, what does it mean in terms of investment? What does it mean in terms of return on investment? So we take, you know, we take it step by step. We educate developers if, you know, they are not so well aware about how those, because, you know, it's a very specific business model. It's a very specific industry, and if you don't know the industry, you know, you really need to be, so you need to surround yourself with people that understand it. And this is, you know, where consultant asset management come into play, and they are here to help them. So I think to answer your question is really working hand. It's, you know, for us, relationship is everything. And we are very transparent from day one as to what we can deliver and what we cannot deliver. I think setting the right expectation from day one is the most important thing. You see a lot of time, you know, when we are in the development phase with investors, you know, everything is nice, it's the honeymoon, and once you need to deliver, you know, this is where things get a little bit more complicated because promises were done, and, you know, so I think it's very important to be transparent, and then working with them very closely to ensuring that, you know, we have the right product, the right profitability, and then finding solutions. Sometimes, you know, we were wrong, they were wrong, and we need to shift gears or go into a different direction. So it's all about the relationship.
All about the relationship. Jean-Baptiste, thank you so much.
Thank you.
Great speaking with you.
Thank you.
Thank you. So last but very not least in this series of interviews, I'm delighted to welcome to the stage Jerome, who's the Chief Development Officer for Marriott across the Europe, Middle East and Africa region. Please give him a warm hand.
How are you?
Good.
This is someone else's water, so I will try not to drink that too much.
Nice to see you've come prepared, Jerome. Great to have you here. Always pleasant to chat. So Jerome, again, first question that I posed to the other two that came before you. How important is Turkey to Marriott strategically? How many times do you hear Turkey mentioned in the boardroom?
So before I answer that, so I was supposed to say good morning. I think we're a little late, so good afternoon, everyone. I think what you all don't know is that Joe looks very, very fresh this morning, and I think it's the first time in weeks we see him so fresh, because you literally just had your baby boy very, very recently, so you must have been very happy to sleep in the hotel last night.
Indeed.
Congratulations.
Thank you. It was a Marriott hotel as well, by the way,
then
so extra fresh this morning. Yeah.
Must have been a great sleep then. Well, Turkey is extremely important for us. You know. Just trying to put some context around where we stand globally versus Turkey. Beyond being the largest operator in number of rooms, we've got 9,000 odd hotels globally, 1.5 million rooms globally. And then you try to take this back into Turkey, we've got 14,000 rooms open and in the pipeline. By the end of the year, we'll be at around 100 hotels. But when you look at the market shares, we've got everywhere else in the world. Take the US, where we are roaming close to the 10% market share, the Middle East, where we've got countries at 15 or 20% market share. In this market, where you have just about under 1 million rooms, 14,000 rooms is nearly 1.5%. It is minuscule compared to the market shares we've got everywhere. So certainly a lot of room for us to go. The other part is, it's 85 million people. And for the longest time, we focused, like many of our other operators, on Istanbul, on Antalya. Those were the markets to go to, because those were the only cities that were visible on the international scale, and that's where we felt we were the most relevant. And with that, we had a leadership in distribution in Istanbul with 34 operating hotels. But we've quickly realized that if we want to be successful in Turkey, the investment needs to be equally strong in different locations, in other cities, in order to service that. I mean, it's one of the rare countries where you've got more than 20 cities with north of 1 million people living in. That's very, very rare. And then I guess one of the key things is what we do with our partners and how well that works. You know, when the way we measure success is inevitably, you know, many of you would have heard about the way Wall Street looks at hotel operators, and there's a term that got created on the street called net unit growth. So everyone's focusing on getting more hotels, converting more, bringing them on board. But ultimately, the other way to measure ourselves is who do we do business with? And there's nothing that brings us more satisfaction than the fact that half of our hotels currently in Turkey are with repeat ownership groups. That means it works. That means we're doing the right thing. That means the performance level, what we bring to the table, is actually successful. So, you know, beyond that, obviously, it's about making sure it's the right brand in the right market. Today, our distribution in this market is about 15% luxury, about half in the premium segments, so Marriott, Sheraton, Autograph Collections, the collection brands have been very strong, and about a big third in the select service and mid-scale, which is very important, especially as you go into Anatolia, because those are the markets you want to talk to the local customers. So it's a long answer to eventually tell you that it's very important. Everything is thought through to ensure that we actually cater to the local market. And with our market share today, I want to say that the future is illimited as far as we're concerned.
Absolutely, but I think we've heard already from a couple of your colleagues representing other brands that the competition is fierce. You know, how is it that you're kind of going into battle? What are your unique kind of levers that you offer to owners, apart from some of those which you've just mentioned?
So, I mean, I don't want to repeat too much of what was said before. That I guess that's the disadvantage of being the third one today. The advantage is I can say anything I want. No one's going to contradict me, I guess. But you know, obviously we invest in our brands. It's very important for us. You know, we have this discussion all the times with owners or franchisees. Our fees are always too high. Yes, they are, but all that money is reinvested in the company. It's reinvested in the brand. It's invested in our systems. Over the last few years, we've been through a multi-billion-dollar internal technology investment that will start rolling out as of next year in North America and then the following year in this part of the world, in order to be a lot more digital, to reduce the need for investment in actual hardware in the hotels, in order to be faster, to be cheaper, to be more efficient. This is the kind of investments that we need to look at as a firm. The second angle will be Marriott Bonvoy. I mean, with 220 million members, we've got an ecosystem of customers we speak to all the time. We work really hard internally with our data analytics team to understand what it is that they do, what it is that they want, what it is that they need. And that allows us to actually go into markets, primary markets, but also other markets globally, and understand what kind of hotels we actually need there. It also allows us to define the product that makes sense within those ones. You know, I'm sure many of you who have owned or currently own a hotel sometimes scratch your head and say, why do I need to spend money in this thing? Why does this make sense in my market? And it's true that very often as brands, we tend to take this global perspective. And part of the reshaping we've been doing recently is to ensure that we bring in people on the ground in order to actually tackle that. So another key element that we've done is invest into an office in this market where we've got 3 developers on the ground to help service our franchise and owner partners. We've got a global design team, we've got an operations team, a GSO, all of which are Turkish. and speak Turkish. So that allows us to actually be meaningfully faster, especially as we get out of Istanbul, for example, where language skills are particularly important. So we'll continue to do that. And I guess the last item is the distribution channels. This is something that is often overlooked. Many consultants will look at a project, and as owners or franchisees, you will ask for a feasibility study, and you will work with the consultant who will issue you a feasibility study, a pro forma, and whether it's a Marriott, a Hilton, an Accor, a Radisson, or a local brand or a brand from a different country, you'll notice that the top line and the bottom line are exactly the same. There is a total disregard for distribution, for brand performance, for rates driven by a brand. The reality is when you have 220 million members, those members want to stay at the Marriott, because if they don't, they lose those points, they lose that redemption ability at the boardroom edition, which they would otherwise not want to pay for, because even I can get a rate in that hotel. It's one of the highest grossing hotels we've got in the world in a seasonal market, which is incredible. But being able to do that is important. As owners, as franchisees, you need to question your advisors. You need to question your partners. You know, we often go out there for takeover of properties, which we've done in the recent past year, and we see hotel chains, be them local or international sometimes, having a sub 10% direct channel contribution. And by that, I mean remove the OTAs, the business that comes from the brand.com or from the application. If you are paying franchise fees, royalty fees, management fees for a brand that brings you 5, 6, 7, 8% direct channel, then you're wasting money. You're giving that money away to someone else. Save it and run the hotel yourself. It's very important as you do this, ask the operators what they do. I mean, we consistently run at the very least in the 20s, very often in the 30s, in the 40s. There are markets where we're north of 60% direct channel contributions. It's critical because that's the cheaper business. That's the direct business that you want to capture. If you need to give it all to an OTA, if you need to give it all to a tour operator or a travel agent, then do it yourself. I mean, the Booking.com will do that business for you at a very high commission. But sometimes it's cheaper than going with an operator that doesn't bring distribution. So that's a key channel for us.
I think I'll strike the question I had about how you're driving top line and profitability. Maybe let's move on to development viability, Jerome. And clearly you have sight over many markets within your remit. How does Turkey differ from a development viability point of view, and how are you supporting owners and developers to take projects forward?
Yes, so that investment is a key way to do it. And it's, as I said, it's doing the right product in the right location. You know? If you go back 20, 30, 40 years, all you needed to do is to sign a Sheraton in Istanbul, a Ritz-Carlton in Istanbul, or a Marriott in Istanbul, open it and they'll come. I think those days are over. I mean, they're still very important, but all the big brands have taken their fair share. You've got big hotels out there in this market. But the customer has changed a little bit as well. They want that authenticity. They want to know the purpose of the hotel. I mean, you wouldn't believe how many of our GSO customers, or our top global accounts, ask us for the ESG credential of the hotel that they'll stay in, unless we can actually provide that. So they want to know the carbon footprint of the property they'll go to, of us as an organization as they travel to. So we've had to change the way we do business. When we develop hotels, do them differently. And that's also why we've brought concepts here like Fairfield by Marriott, which has worked remarkably well. They're semi-prototypical hotels that are incredibly energy efficient and that bring you that. The second part is what the customer wants. You know, we still sometimes think that the customer just wants a Marriott everywhere, or a Hilton everywhere, or a Sofitel everywhere. That's no longer true. There is still that customer. Thankfully, those brands have a great recognition and a great adherence. But that authenticity of the local market is also very important. So that's why we've brought over here brands like Autograph Collection, Tribute Portfolio, that actually embrace the local market, the local concept, but also give that customer a sense of authenticity of where they'll be. They also give you as owners or franchisees a vast amount of flexibility around what to do. Define your service, define your authenticity. We'll help you by bringing the standards that you need to ensure that you meet the quality expectations of the customer at that level. But the hotel is you, it's your identity. And so bringing in this. And finally, the last one is another brand that we've created called 4 Points Flex, which has been very successful here. And the concept behind this one is entering into the mid-scale market and for example, in Anatolia here, being able to go into markets where the rates are sometimes more challenged, where it's a little bit more difficult to operate with those international standards. And so what we've done is we've actually taken an approach of making it more simple. Those hotel owners or franchisees, they cannot read through an international company's central service bills of 200 pages where they have to check item by item to make sure that everything's correct. So we've bundled all of that for simplicity. So it's very much easier for them to do it. The transaction is simpler, the relationship is very simpler, the model is very simple, and it attracts the guests, the Marriott Bonvoy guests, with the vote of confidence that we bring through this branding.
So really bringing down the barriers to entry for those that want to access and feel compelled by what you can deliver as an overall system.
Absolutely, while guaranteeing a great night of sleep, the safety level you would expect in a Marriott International hotels, and making sure that the guest is taken care of.
Great. And I think you've probably whet the appetite of a number of people in the audience, but if they want to get a flavor of Marriott and some of the projects that you're bringing forward and the concepts in Turkey, where should they go? What should they go and have a look at?
So we've got, I see one of our greatest here, right here and there in front of me, Begum Kaya, who's leading our development efforts here in the country. Recher is also somewhere around. I mean, we've got a great development team, and if you stop by our booth, we'll happily do that and put you in touch. I mean, we're fairly easy to reach. Zeynep also just joined us. We're everywhere in the country. It's hard to miss us unless you try to avoid us. And again, I would not blame you for trying to avoid us, but you'll see they look angry, but they don't bite. They're very friendly developers.
Perfect. Thank you very much. Well, that concludes our 3 brand interviews. Please give a very warm hand to Jerome from Marriott.
Thank you.
Thank you, sir.
Thank you.